Milan. Let us look at example 2, which is a pre-adjustment trial balance for the year ended 28 February 2016. Under the financial position accounts section, trading stock is sitting at 775,200. And under nominal accounts section, the packing material is sitting at 4,500. Stationery is sitting at 14,400. And then under adjustments, they have the following. They told you that the owner, James Lully, donated goods with a retail value of 250. That 250 is the selling price of the goods being donated. And the cost price of those goods being donated will be 200,000. Note that when it comes to donations will be recognized as an expense. But that expense will be the cost price of what is being donated. When we record donations of trading stock, we will not record it at selling price. Instead, we will record it at cost price. Note that this value will affect the cost price of trading stock. How will it affect the cost price of trading stock? It will decrease trading stock that we already have because we will not have 200 Rand worth of trading stock. And as per the previous video, you will remember I said to you, for now, trading stock will always be measured at cost price. And I did mention that later on, when you get to first year, second year, you will learn about what is referred to as net realizable value. But for now, grade 12, just remember that trading stock must always be measured at cost price. And then they told you that stock count on the 28th of February 2016 revealed the following on hand. Trading stock at 770,000, stationery 600,000, and packing material will be 1,500. You are required to prepare the following. Trading stock deficit or surplus, and the amount of stationery that will not be recognized as an expense, and the one that will be recognized as an expense. You need to record the above transactions in the statement of comprehensive income and the notes to the financial statements, and then record everything in the general journal. I just want to go back to the question. And I want to record the first adjustment, which is about the owner, James Lully, donating goods. Highlight goods, because that tells you that we are donating trading stock. We are not donating stationery. We are not donating packing material. We are not donating cash. We are simply donating trading stock. If we were donating cash, please note that that transaction will have been recorded in the CPJ, in the cash payment journal. However, when it comes to the donation of goods, it will be recorded in the general journal. It will be recorded in the general journal. How do we record it in the general journal? You will debit donations because that is an expense. Expenses, when they increase on the debit side. Account debited will be donations. That is because that is an expense, and expenses increase on the debit side. On the other hand, we donated trading stock. Trading stock is an asset. In this case, your asset will decrease. And when it decreases on the credit side. And obviously, that will be donation of trading stock at cost price. Why am I doing this? All I have done thus far is to reduce the value of stock that I've got in my trial balance because it is incorrect. The reason why it is incorrect is because this adjustment here took place and that value was not adjusted. As it says, pre-adjustment. It was not adjusted. So we need to adjust it to the correct value. So at the moment, all we know is that our trading stock is sitting at 775,000. So in our trial balance, our trading stock will be sitting at 775,000. How did I get that 775,000? I simply took the 775,200 and I subtracted the 200, which is the value or the cost price of trading stock that has been donated. I do not have 200 worth of trading stock as it has been donated. Remember, you adjust and then you compare. Adjust, then compare. You don't compare and then adjust. No, you take into account adjustments first before you can start comparing. And then under adjustment, it says that, which is the second adjustment, stock counts on the 28th of February 2016, which is the end of the financial year, revealed the following on hand. On hand simply means it's what we have in the warehouse and we physically counted it. So trading stock is sitting at 770,000. What am I going to do? I am going to take the trading stock that I have in my trial balance, which has been adjusted, of 775,000. And then I'm going to compare it to the trading stock that I have counted. And according to the stock count, the value of trading stock is sitting at 770,000. Meaning that my trading stock in the trial balance is inaccurate. Remember, I said the correct trading stock value will be the trading stock value as per the stock count. So that 775,000 needs to go down. And I said when it goes down, that downward difference, or which is the difference between the two values, will be regarded as trading stock deficit, because what we have in our books needs to be brought down to what we have in the warehouse, which is 770,000. That is because the one that we have in the warehouse is the most accurate value. So we need to bring that 775,000 down. We need to decrease it. How do we decrease it? We will recognize trading stock deficit, which is an expense. It's an expense because that value of trading stock, we will never get it back. So it reduces your asset, okay? So I don't want to get into the fact that whatever reduces your asset is actually an expense, okay? So we are expensing a portion of our asset, which is trading stock. All right. And obviously, there is an easier explanation of what I'm doing right now is the fact that trading stock deficit is all accumulated losses of trading stock. So it might have been due to theft, it might have been due to obsolescence, it might have to be due to damage. All right. So all of those will be regarded as an expense. And our expense in this case is sitting at 5,000 rand. Our trading stock, at the same time, our trading stock will decrease at the same value, which is 5,000 rand. So why are we reducing it by 5,000 rand? We're reducing it by 5,000 rand so that it can be at the correct value, and the correct value will be 770,000, which is the value of stock as per the stock count. And as I've said, this will be trading stock as per the stock count. Let's go back to the question. I'm basically done with trading stock. Okay. I will do the general ledger at the end, but what I always advise is that once you realize that you're done with trading stock, just go to the general ledger and record the entire thing and make sure that you're done with it. So you will have balance brought down of trading stock in the trial balance, which is sitting at 775,200. It will be decreased by the value of trading stock that you donated, which was recorded in the general journal, and that was 200,000. And now it will also decrease by total accumulated losses of trading stock. In this case, that amount will be 5,000. How much trading stock are we left with? So we're going to have balance carried down, which is the stock, the value of stock we are left with. And that amount will be 770,000. So what we currently have in our books is the same as what we have in the warehouse. Those two amounts must correspond. And what we have in the warehouse is the accurate one because it's actually what we got. And then it says stationery. Remember, this is what was revealed from the stock count, and this is what we have on hand. So at the moment, our stationery on hand is sitting at 600. How do we record that? We are going to take that 600 and reduce the trading stock, not the trading stock, the stationery that we have in the trial balance by 600. The reason why we're doing that is because that 14,400 is actually not our expense. Our expense of stationery will be what has been used. And we know that 600 of that 14,000 was not used. So we will start with what we have in the trial balance. In our trial balance, that 600 will be recognized as consumable stores on hand. We will debit consumable stores on hand and then credit stationery. We are reducing that expense that we have in the trial balance because that is not the actual expense. The actual expense will be an expense that has been used. So when you reduce it by what has not been used, you'll be left with what has been used. And then we've got picking material. Picking material in the trial balance is sitting at 4,500. But as per the stock count, what the stock count revealed is that we still have 1,500 worth of picking material that has not been used. So we're going to take our total picking material minus what has not been used. We will be left with what has been used, which will be our expense. For this year, all we want is to make sure that an expense is measured at the correct value. Hence, we are simply going to do the same thing again. Debit consumable stores on hand, but then credit packing material. We are going to credit packing material by 1,500. We are simply reducing it from 4,500 by 1,500 to arrive at 3,000, which will be our actual expense when it comes to packing material. So in total, our consumable stores on hand will be 2,100, which is made up of, remember we debited consumable stores on hand twice. It is simply made up of this 600 plus this 1,500. It'll give you that 2,100. And this is packing material on hand. I just want to revisit this again. Remember with my trading stock, I said the balance as per the trial balance was 775,200. It was reduced by donations of stock worth 200, and it will be reduced by our trading stock deficit, which was 5,000. Remaining trading stock will be 770,000, of which we will bring forward or bring down to the following month, which is, however, the following financial year, which is the 1st of March, and our balance brought down will be that 770,000, which was trading stock that was left from last year, which is a leftover from last year. Our consumable stores on hand will be made up of, remember, consumable stores on hand is an asset which represents unused expenses. Okay, those expenses, we're going to keep them as stock for this year. We will use them in the next financial year. So it is a current asset because we expect to use it in the next, or to consume it in the next financial year. So our packing material will be packing material unused will be 1,500, and stationery unused was 600, resulting in our remaining or simply unused expenses, which we refer to as our inventory for this year, and the amount will be that 2,100. And that is what we are going to have as consumables that we have to use in the next financial year, and that will be 2,100. Our picking material, here we need to recognize the actual expense. So we are going to take the packing material that we have in the trial balance, which was 14,000 or 4,500. We are going to reduce it with packing material that was unused. And the actual expense, we are going to take it to your profit or loss account, and that will be 3,000. So our actual expense when it comes to picking material will be 3,000. And for stationery, our stationery in the trial balance has to be decreased by what was unused, which was 600. And our actual expense that will go to profit or loss will be that 14,400 minus 600, and that will give you 13,800. That is your actual expense. As I've said, donations is an expense. We are going to debit it as an expense and simply close it off to profit or loss because that is an expense. And trading stock deficit, which was as a result of a reduction of trading stock, will also be closed off to profit or loss account. The last step will be to record everything in our statement of profit or loss, in our financial statement, starting with the statement of profit or loss. We are going to have donations, which is an expense, that will be 200. And then we have trading stock deficit. Remember to show workings in brackets of 5,000. Then we'll have picking material. So the one that is being used will be an expense, which is 3,000. Lastly, it will be stationary, and you simply will take what we have in the trial balance and you simply subtract what has not been used, and it'll be left with what is being used, which is 13,800. And that is your expense. Just re-emphasizing, you minus what has not been used. The unused part will be recognized as consumable stores on hand. Add all those expenses, your total operating expense will be sitting at 22,000, and you will put that in brackets because it's an expense. As I've said, the unused part will be recorded in the inventory. Now, in our inventory note, we will start with trading stock on hand as per the stock count, and that will have been 770,000. Our consumable stores on hand, which is under inventory as well, will be 1,500 plus 600. That will be 2,100. Our total inventory will be 772,100. Try example 3 on your own. Prepare the general journal. And prepare the following ledger accounts. statement of profit or loss, and the notes to the financial statement. Please don't forget to subscribe and click the notification to ensure that you get notified whenever I post a new video. Thank you for watching. Khotso.